Hi, welcome back to Fund Flows Insight. I'm Jeff Turnahoy. For the week ended April 6, 2016, we saw fairly light net activity for long-term mutual funds and just saw money markets with the big outflows this week. Let's take a look at our macro groups and see what happened. Starting off the top here, equity funds, as I said, had fairly muted outflows, just about $328 million this week, give or take. Taxable and tax-exempt bond funds continued on with their inflow streak, about over $2.3 billion together. And money market funds were the real news with about $21 billion in outflows, though I wouldn't say that that's a record or anything close to it. Well, the week got off to an interesting start for equity mutual funds and kind of continued sideways after that. So overall, the net effect for equity funds was a fairly light change in market values over the week. And that probably prompted investors to kind of stand pat or maybe pull a little money out. So when we take a look at equity mutual fund flows this week, we see that overall, we did see a loss this week. It's the first one in 6 weeks. So if investors can't get behind a 6-week streak, I don't know what will. Maybe they're just trying to diversify out of their typical core holdings. So on that note, we saw domestic equity funds continue with outflows, about $1.2 billion pulled from them. Non-domestic saw inflows, about $881 million. Investors really didn't like large caps this week, though. Between large cap core and large cap growth, almost $1.7 billion pulled from both of those. Emerging markets weren't any popular this week either. They saw outflows about $180 million, which wasn't exactly terrible, but considering the bounce that emerging markets have had recently, it is a bit surprising that of all weeks, this week they pulled money out. Last group that we saw inflows in, though, was equity income. They had inflows of $868 million, a pretty good week for them. Well, the outflows that equity mutual funds had were the mirror image of inflows for equity ETFs. This week they took in $1.7 billion, and for totally different reasons than mutual fund investors had for pulling money. They put money to work here in such areas as large caps and some other areas like utilities and technology. Investors on the ETF side did not like small caps. They pulled money from that, from Japan, and instead, like I said, they put money to work in SPY, about $1.1 billion there, plus some assorted sector-specific spiders below that. IWM was the loss leader this week, about $880 million pulled from that one. They also pulled money, like I said, from Japanese ETFs, although the Japanese stock market had a terrible week, down about 4.5%, and yet the iShares MSCI Japan ETF only had outflows of $380 million, so maybe investors thought that the worst had already passed. Well, let's take a look at the next group. This is taxable bond mutual funds, and here we saw another good week of performance. Core bond funds led the way with $868 million in net inflows. High yield not too far behind them at $847 million. Core Plus, which is just a more aggressive version of the core bond group, they also had inflows this week, $767 million, and mortgages, mostly led by Double Line Total Return, also had inflows, about $450 million for that group. Loans, however, have had a hard time getting investors' confidence again. They suffered outflows of about $150 million this week and very little activity elsewhere to speak of. Well, again, just like ETF investors went in a different direction than mutual fund investors, so did bond ETF investors. They actually pulled money this week, about $893 million. As you can see, the groups that they really liked, TIP as well as HYG and some other emerging markets, had pretty good inflows. What they didn't like, treasuries, especially the non-inflation treasuries like General U.S. Treasury and Short Treasury. Those groups combined had outflows of $2 billion as investors maybe didn't like what they heard out of Janet Yellen this week. So aside from an inflation play, there wasn't much that they appreciated in the Treasury market. Next group to take a look at is municipal debt funds. They also had inflows this week, $641 million. This kind of keeps their winning ways moving along. They had a great week of performance, though, up about 61 basis points on average. This week also saw the 10-year Treasury fall to below 1.7% at one point. So there are some pretty good coattails for munis to ride right now. The Bond Buyer 20 General Obligation Index also saw its yield fall to 3.48%. So on a total return basis, it's a nice time to be in munis, although that dividend is getting smaller and smaller by the day. High yield munis almost led the way with $150 million, but instead, taking the lead from them, general municipal debt funds saw $286 million in net inflows, kind of a jockeying for position between those groups lately. Well, the final group to take a look at is money market funds. They had the only notable outflows this week, $21.3 billion, and we can slice and dice that into a couple of sections. We saw retail-oriented money market funds take in $2 billion this week, while institutional money market funds shed $23.3 billion. Put differently, we could also see that tax-exempt money market funds, both retail and institutions, had outflows of $105 million. Government and Treasury money market funds had inflows of $189 million. And prime money market funds had outflows of $21.6 billion. Most of this, again, is all from prime institutional accounts. So potentially there are some bonuses being paid or other ways that some seasonal adjustments are being made. Well, that'll wrap it up for this week's Flows Report. Please join us next week where another analyst will slice and dice mutual fund and ETF flows data for you and give you some additional insight. I'm Jeff Turnhoy. Thanks for watching.